Let's talk about risk management today in trading. So, why am I talking about this? Well, it's first of all, a lot of you guys are probably blowing accounts before you're actually letting your edge play out. And I'm specifically talking about funded accounts and prop firms. For you guys who are trading a personal account, you should only be really ideally risking like 1% unless you just started the account per trade. So there's no way you can blow your account on a personal account. But for y'all trading fundeds, look at my screen right now. This is exactly showing you guys how you're blowing your account even though you might actually be profitable, right? Blowing account does not mean you're not profitable in trading, especially when it comes to prop firms. You're just not using the correct risk management parameters. Let's get straight into it. So why picking the correct risk percent per trade is important. First of all, risk management just means the risk percent you're willing to invest or risk per trade. I always recommend you guys keep this percent static. I don't recommend you decreasing your risk when you're in drawdown because all that will do is increase the further duration it takes for you to crawl out of that drawdown because again, it's a sequence game, it's a numbers game, it's the statistics and variability and variance will come. And there's not much you can do about it other than stick to your edge because once you alleviate or go another way, then your edge disappears and you're trading something else. So if you want to know what correct percent of risk per trade is, you want to use either your backtesting data or something called the Monte Carlo simulator. And in the simulator, all you're doing is putting in the frequency of trades because that does matter. The more trades you're taking, the more likely you will have more drawdown. The max drawdown basically is what you're looking for in either your backtested data or the Monte Carlo simulator. And in the Monte Carlo simulator, you're putting in basically your trade frequency, and then it just asks for your win rate and average risk reward. If you want the link to that Monte Carlo simulator, check the free Discord server. I have a literally free trading resources section completely free for all you guys beginners. So highly recommend joining the Discord community, man, for that. But if you do have a bad test, make sure it's around 100 trades minimum. So you can use that number as well for your basically full max drawdown percent. So you want to look at your max loss streak, losing streak. This is what you truly want to look at. So let's say your max losing streak is from your backtest is let's say 5. Okay, let's say you trade a high win rate strategy. It's only 3 max losses in a row. So over a span of a huge single size, you're expected to lose only 3 losses in a row. What does this mean? This means 2 things. Number 1, this means you can risk higher percent per trade, technically, because let's say you have 1/10 or 1/10 of a drawdown on your funded accounts. We're gonna basically talk about fund accounts today, because prop or personal accounts, there's no way you're losing 100 trades in a row to blow a personal account. But let's talk about prop firms. Usually for most people, you have your drawdown here. Let's say your drawdown is, we're gonna use let's use top sets 50K accounts. Most people trade those. It's the most value for your money, essentially, especially if you're new. So let's say you have 2K max drawdown, and this is your max drawdown, and most people, they will risk 1/10 of this. So you'll usually risk $200 per trade. Now, if you're on a high win rate system where your max losing streak is low, you can actually increase this risk. Instead of 1/10, you can increase this to something like 1/5. So now you're risking 400 per trade. So in a sense, you're doubling your net return now just by doubling your risk percent per trade. Why? Because your max loss and drawdown is 3. So if you do the math here, this would basically equate 3 max losses with 1/10 drawdown is equivalent to basically 6 losses in a row if you're risking double, right? So if you do the math here, this would be about 1,200 drawdown if you're doubling your risk versus 600 drawdown. And so if you're trading a high win rate strategy, I would recommend actually that you do up your risk, because I'm not trying to say you should be blowing your account, but I'm more so saying you want to take advantage of the environment and your data. If you have high win rate, you can leverage what I call risk. But if you don't have a high win rate, let's say your max losing streak is, let's say you're trading a very high risk reward system like 1/7, and your win rate's like 30%, which is profitable still, which is fine. Let's say your max losing streak is 8. Then at this point, I do not recommend at all that you risk 1/5 of your entire drawdown on your account. Risk only 1/10 or even less than this, because keep this in mind. How is your psychology going to be when you are 8 out of 10 in drawdown? It's probably going to be horrible. And usually you guys know what happens when your psychology is horrible. You think you only have 2 trades left before you lose everything. And even though that shouldn't be the way you think, That is basically the real reality that you're facing. And so you'll probably tilt or deviate from your edge and take random trades. If that's the case, then boom, there goes your max losing streak. This can go to like 20, 30, 40, right? If you're tilting and you lose the entire count. So try to make it so that your max losing streak on your right edge, depending on your edge of your win rate and risk reward average, is not getting you very close to drawdown. Give it some buffer room. So like doubling your risk at a max losing streak at number 3 of 3 trades in a row is not too bad, because you still have what? I believe 1, 2, 3, 4, 5. You have 1,200 drawdown after 3 losses, so you still have $800 left to play with, right? So it's not as bad or anywhere close to bad as something like 8, where you're 8 out of 10 away. So hopefully that does make sense. My math, I think there was actually slightly off there, but nonetheless, you guys get my point I'm trying to get at here, right? So leverage your stats and fit those stats to the risk management you pick. Now, here's the problem with a lot of you guys. Not talking about this now. We're talking about payouts. Payouts. Some of you guys have a profitable system. You have the mental side of trading already unlocked, meaning you actually, trading probably already clicked for you maybe months ago, but what didn't click for you is understanding losing streaks and accepting defeat and accepting losers. If you're here to trade and day trade like me full time, you have to accept to lose. I don't mean lose over long run. I mean lose trades. If you cannot lose trades in trading or cannot take on losses, you're not built for trading. And you have to face this problem head on. Every time you take a loss, just sit back, come back, take a break, come back to the charts. That's what I highly recommend for most of you guys, depending on how you're trading. If you're scalping, you probably can't do that. But if you're taking like one trade every 30 minutes, take a breather, come back to the charts, fresh, clean mindset, or just take one trade a day. And there's no way to make psychological mistakes if you're taking only one trade a day, right? But a lot of you guys, what you guys are doing wrong is you're actually already profitable. It's just that your risk management is off. So let's say, imagine this is $0 here, which is your initial balance. So this is your initial balance of your account here. Let's say this is already a funded account. So you already paid the activation fees. It's an XFA. If your risk management percent you pick is too aggressive, for example, let's say you have 8 max losing streak from your backtesting, but you decide to go with the 1/5 drawdown risk percent, meaning you only need to lose 5 trades until you hit max drawdown on the account, which is what I call the account max drawdown, then you're cooked, because like you're gonna hit max drawdown on the account before your true drawdown. So this is what I call your true drawdown. So your actual number of your max losing streak is the true maximum drawdown of your strategy and system. You want to make sure that your account max drawdown matches your true max drawdown as close as possible when it comes to trading these prop firm accounts. So again, if you risk too aggressively, you'll hit the max drawdown before you actually see your edge play out in your favor, right? Sometimes you do get lucky in a sense where your edge actually plays out in the beginning, and then you get the peak or drop pullback in your equity curve, and then you continue higher like this. But there's sometimes where it may look like something like this. Again, this is completely random, right? It's just it's just trade sequences. You never know which one's going to be the winner, which one's going to be a loser. And so if something like this happens where the beginning stage is bad price action or something, or strategy doesn't work too well during the past maybe a few weeks or a few days, then this is where you can hit account max drawdown before your true max drawdown. So like if you're trading with a low win rate, high risk reward system with 8 max losing streak, you better make sure you fit your max drawdown to like 1/10 risk percent per trade. Because at that point, let's say this is 8 losing streaks in a row here, right? If you match your risk percent per trade with your true max drawdown, your account max drawdown and true max drawdown should both be on the same level in a sense, close enough, right? In this case, even though you're on an 8 losing streak, you still have your account. That's the point. You still have your funded account. You still have your funding. It just will come with a lot of psychological toll, yes. So you maybe even want to have this to 1/20th risk percent per trade. So basically, you have to lose 20 in a row to lose the count. That's even better, but that might take much longer for you to get payout status. So I wouldn't recommend that. Personally, I'd say 1/10 is good enough risk percent per trade for most people or for most systems. But as long as you don't tilt into such, you should be able to crawl out of this at some point and plays out. Sometimes you may get unlucky and you might hit like 11 max and then boom, your equity curve flies. you can't do much there. That's just probabilities and sequencing playing out. But this is what the problem, again, like I said, most of you guys have is your account max drawdown of what you're actually risking on the account does not match your back tested max drawdown. And this is what happens at the end of the day to your equity curve. You're hitting your edge is still playing out, but you lose the entire account before that. You don't want that to happen. You want to make sure that your edge is, you don't lose the account while your edge is still in drawdown. So again, making sure account drawdown, max drawdown, and true max drawdown is on the same level. Hopefully this video makes sense to you guys. If you guys did enjoy today's video, make sure to leave a like, comment, and subscribe. And I'll see you guys in the free Discord server. Peace.